So it is July 2026, and what's going on with the local housing market. So our area is a little different than what we're seeing around the country. So I want to kind of give you some comparison stuff to see. There's a slide here that says some sellers are choosing to wait. In New York, you're probably right in the middle of it, of where people are in the country. There are a lot of people in the country that are saying, hey, no, I'm going to wait. I'm going to wait until next year. I'm going to see what happens. What we've seen a lot this year in our market is because of the strong winter that we had, a lot of people put their house off, from going on the market, didn't do the repairs, so we saw it later. And where we would typically see about 10 homes come on the market in a given area, let's say, we only saw about 5. And then typically what would happen is we'd see that other 5 come as the spring market hit. This year, I don't think we saw the other 5. So we are still dealing with a low inventory environment. Throughout the country, you're seeing more inventory rise. In our area, we're not really seeing that. I think this year is going to probably be anywhere from 5 to 10% less than last year, even though the national housing numbers will say differently. What that does a little bit for us is that in the Northeast, in our area, when people are selling at high prices, if there's a little bit more inventory coming on the market in Florida, in Texas, in Tennessee, and Arizona, whatever the case may be, people probably have a little bit more to choose from. That means they're negotiating a little bit more. So they're still selling at a peak, and maybe they're buying more at a nominal market. So that's a good sign for us as people are looking to make the move, out of the area. 80% of sellers think they'll get their asking price or more. I do think in our market, if you're priced right, you should get more than market value. So when we look at comparables, that's what appraised value would be. They're looking at our sales, then we have market value. Right now, our market value is higher than most appraised values. We're selling into an upward trend. So if our comps say that we're $1 million, could we get $1,050,000, a 1.1? Absolutely. Depends on how hot the market is, what the market looks like for that house, and what the true, appraised value really is. And then we just talk about strategy of how, we get the most money out of the property. Homes are taking longer to sell nationally. Once again, not necessarily here. What we are seeing here is that if the home is flying, it's going to fly in the first week or two. But if the home sits for 30 days, 60 days, then it's going to sit there for a while unless you make a drastic price reduction. And that's what we are seeing, is not everything is flying off the shelf. A lot of things are, some things are not. And that's something to watch and make sure when we're prepping, where do we put things together. So in New York as a whole, it's actually one of the least states that homes are sitting on the market longer. You're seeing a lot more in the Sun Belt that those homes are, sitting on the market longer. There's more inventory, there's more homes, than there are buyers in some states. And that, like I said, works a little bit in our favor because you're selling high, you're buying at a market that's declining. Something to think about. In a lot of those Sun Belt states, a lot of times, those properties went up 200, 300%. In our market, we were at 50%. Maybe the property values have doubled, but it didn't go as high as some of these other places. And I think that's what's keeping us from a bubble, which hopefully that the rest of the country doesn't get themselves inventory. The outlook calls for continued home price growth. I agree with that 150%. I think that rates are, in the low 6s, which is a pretty good interest rate if you look historically. I think the 3% that's in the rearview mirror now, I don't think we're seeing that. I think the only thing in our area that would really derail some of the pricing would be if we have more supply come on, which I don't see a huge change in that. I'm seeing a lot more people that they're staying in their home longer. Sometimes it's becoming generational, where it's 2 or 3 generations in one house. Versus people that are selling and moving on. So we're seeing still that low inventory, and I thought we'd be out of it already. I think we're still going to be in it for a while unless unemployment really ticks up. Mortgage rates, what are they expected to do? So this chart that came out, as of 6/29, this came out, they're expecting by Q2 2027, the average to be 6.33. That's about right. That's where we are today. Now, this could go a little higher if we don't get out of the war with Iran, get, the oil prices going, oil prices down, because if oil prices are up, gas prices are up, means food's going to be up, lumber's going to be, everything's going to be up, which is going to cause inflation, which the Fed will most likely then have to raise rates to curb inflation. So it's something to watch, something to see what's going on. Hopefully these prices kind of remain in the range in which we're at. Rich Martin's SVP of Retail Lending said oil matters, particularly since it drives inflation expectations and thus influences the bond market from which the mortgage rates are set. Remember, mortgage rates are set by the 10-year Treasury. They're not set by the Fed funds rate. So we're going to see where it goes. The mortgage rates probably have creeped up a little bit already because mortgage rates are built on anticipation. Fed reacts to what's going on. The bond yields, the bond market goes on what they think is going to happen, okay? John Overfelt, owner American Security Mortgage Corp. Lower energy costs can help reduce inflationary pressure, which is generally favorable for mortgage rates. Unfortunately, because we can't get out of this war right now, we are still, I think have some inflationary risk that we have to take a look at and see what's going on. So if you're thinking about waiting, there is a chance that those rates go a little bit higher in the next 6 to 12 months. So nationally, they are predicting that sales are going to be up probably about 100,000 units, give or take, overall in the U.S., a few percentage points. Like I said, I think when I ran the numbers locally, we were down about 10%. So far, we're going to see that didn't include the spring market there. So I think we're going to be down anywhere from 2.5% to 5% as far as inventory. The rest of the year is probably going to look a lot like what we've seen so far, this year. Those little, I call it the basketball, the up and downs. And I think that's what we're going to see for this market. So, this is something where we're still in a strong market, still lacking supply. Buyer demand is pretty strong. Interest rates are relatively stable. I think the shock of going into, the war with Iran, unfortunately, will probably be there for a little bit. I think the shock has come out of it. So, if you're looking to buy, we still have these highest and best situations that we have to help you navigate, get your offer in the best position possible to be able to get that property. And if you're looking to sell, it's having us come in. How do we prep the property? How do we get you as much money as possible or get you multiple options, for you to be able to pick the time you want, the offer you want to take out there. Any questions, feel free, reach out, DM, call, text, email, smoke signals, Geico plane, whatever it takes. We're here to help. Feel free to reach out.